Hello, and thank you for joining Denise of D. Stevens Bookkeeping and Tax Service. Tomorrow, January 29th, 2018, opens the 2018 filing season for the 2017 tax year. The IRS is encouraging all taxpayers to file their tax return tomorrow if they possibly can, or as soon as possible. Back in 2017, early May, Equifax, the credit reporting agency, one of the three major credit reporting agencies, had a major breach in their security. Most Americans' information was compromised in that breach. So much so, and so extensive was that breach, that you can be copied, mirrored, duplicated, and a tax return can be filed on your behalf with as much data as was lost in that breach. And as a result of that, if you were not one of those who followed the protocols after you discovered that your name was breached in that organizational breach, then chances are there probably will be a tax return filed in your name, and it may not be the one you filed. So that, together with constant identity theft threats, phishing scams of all sorts, take that extra precaution. If you have all of your documentation ready, go ahead and file that tax return as soon as possible. Now, getting back to where I left off in our last video, we ended with the question of whether you will need to file or submit a new W4 to your payroll office. Well, that was a huge question because of the new tax legislation that was signed into law in December 2017. And so the IRS released, among other things, publication notice 1036, which dealt with the withholding tables and the question of the W4. And so I just want to review some of that with you and to give you a guideline for how to proceed and where you should be thinking, because that is a very important question. Okay, so the new IRS tax tables are available and they have been released. When will employers and payroll officers have to use those new tables? Well, as soon as possible, but no later than February 15th, 2018. So the sooner your organization implements the new revised tables in their payroll operations, you as an employee will see the change in your pay. Now, depending on when you are paid, whether you're paid weekly, whether you're paid bi-weekly, semi-monthly, bi-weekly, monthly, annually, will determine when you will see personally the change in your pay going home. So the new withholding tables are designed to work with the current W4 on file. Okay, so it minimizes the burden for you at the present time. So when the education to payroll offices is complete with the Internal Revenue Service, they will then be in turn able to assist each employee. The W4 form, the new one, is not complete yet. So with what you already have on file, the new tax tables are reflecting the existing W4s. So at the present time, there's nothing that you need to do, but that is going to change later in the year. Okay? So the IRS has a tool. It's called the tax calculator. If you go to the irs.gov and in the search box type in tax calculator, you will be able to get an idea based on what you put in the criterion selections, what your tax will be. Now, we'll get into the methodology of how your tax is going to be calculated in just a few moments. But as a tool to both employers, payroll officers, bookkeepers, tax advisors, and employees, the IRS does have the tax calculator available. Just go to their website. In that search box, type tax calculator, and you'll be able to use that to get a pretty good idea of what your tax situation and your tax liability would be. Now, that tool is already available, and it will continually be revised, as with the W4 that is going to be based on the new tax legislation. And we've got a really aggressive deadline date for these changes, and February is that deadline date. So just be on the lookout for those changes. Okay, the calculator in the new W4 can be used by employees who wish to update their withholding in response to the new law or changes in their personal circumstances in 2018. And any new workers who are starting a new job in 2018. Until a new W4 is issued, employees and employers should continue to use the existing W4s, but based on the new tax withholding tables. Okay, so those tax withholding tables, they reflect the changes in the available itemized deductions, increases in the child tax credit, the dependent credit, and the repeal of the dependent and exemptions. So you can, as a new employee and as an existing employee, you can still use the W4 that you have on file. You will not necessarily need to do any action right now, because a W4 form, a revised one and an updated one, is on its way. So just hold off, because the tax tables take into consideration those changes in the tax law that affect most employees. Okay, so the new tax tables, how are they structured? Kind of complex, but here's a summary of that. They are based on a couple of factors. How frequently do you get paid? Is it weekly? Is it biweekly? Semi-monthly? Annually? Semi-annually? And it's based on two filing statuses of single and married. It also takes into consideration income. So it is based on the factor of you as an employee earning so much, the number of allowances. Is your income within one of the income brackets? If it is, there's a flat tax rate. And then if your income exceeds that certain dollar amount, there is a percentage based on your tax bracket above that amount, but not over the next group of taxpayers. So where you are within that tax structure in one of those 7 tax brackets, your income, your annual income is going to come within one of those, and your tax rate is based on that. When it comes to figuring your tax, whether you're married or whether you are single, what your income is and your allowances are all kind of placed alongside that annual income. If it's within that income bracket, this is what your tax is. If it's in excess of that income bracket, but less than X, whatever X may be, then it's a percentage that's over that amount. So that percentage, multiply the amount you're over plus that flat rate. So that's how it takes into consideration what your tax is and will be. Now, the percentage, what's going to drive your withholdings are your personal or your withholding allowances. And with the changes in the current tax law, I believe that may be an item that's going to be removed or either so significantly modified. But at the present time, you're still allowed allowances for several different allowances within that W4, but the new tax tables are going to take into consideration the current allowances and what an individual taxpayer can take advantage of or presently takes advantage of to bring home as much of their own earnings as they possibly can. So that's how the tax tables are set up. Now, the tax for non-resident aliens is a far more complex calculation. And so I will address the non-resident alien in another video. There were a series of frequently asked questions to the IRS with respect to the changes in the W4 and when you would see the effects of that. Again, what's driving and when you as a taxpayer, when you will see the change in your pay, how frequently you get paid, and when your organization implements the new tax table withholding tables in their accounting system. So there has to be some adjustments made for that. And I would suspect that there will be some testing done to see if there's going to be any system failure. So they've been given some time in order to address those issues, software issues, compatibility issues that the employer would incur to implement these changes. But they have to be in place by February 15th, according to the Internal Revenue Service, each organization. So the earliest that you might see if you're on a weekly pay will be the latter end of February. If you're bi-weekly, then it will probably be your first pay in March 2018. So that's it with the Internal Revenue Service. Now, the state of New York, we have some changes there that I'd like to just go over with our tax preparers and bookkeepers and accountants and attorneys who prepare taxes. As a tool, you know that the New York State has an online services account, and there's going to be some major changes taking place there. Again, those are going to be effective early February. And so questions about those changes, just contact the online services or the dedicated line for tax professionals, which you have or should have in your files. And I'm not able to disclose what that dedicated line number, because that is for tax professionals only. Okay, so they've got some tools to assist you with the preparation of your client's taxes. If they're personal, the 1099-G lookup. Right now, you have access to those files before you're going to have to split your online services account, and where you are currently able from your account assist and or perhaps inquire or represent your clients on their behalf before the state taxing authority. That's going to change. So it's going to be more client centered to protect the client. So those access to those records are going to be separated. And so while the 1099-Gs are available, that lookup is available, you can grab those now before the early February 5th deadline. You won't have access to that. So anything that you need to get, you want to get that now before you're unable to do that, especially if you're not able to set those online accounts up before the end of this coming week. Also remember that the driver's license requirement for all tax preparers for this tax season. You know that you'll need to key that information in. So check with your software developer and make sure your EROs know that is a requirement, and you will be signing off as a part of your due diligence requirements that you in fact asked for and identified that taxpayer to be who he or she is. So I went into the tax professional online services account. That's a big change for state of New York. So you want to call in on that dedicated line for clarity, for any questions that you may have, and when your access to your client information or if you will be blocked out of your current online services account, because that is a possibility if you don't set up the new online account under the new protocols. Remember the record keeping guidance for individuals. It is 3 years and estimated tax payments. With the new system, you will need to encourage, if your clients have not already paid past due estimated tax payments that they were required to make before any new taxes are filed, tax returns are filed, they need to be caught up on those prior past due estimated tax payments. So that's it for now. Thank you for spending time with me. You typically would see the scroll on how to reach me at the bottom of the screen. That's a long story for today, but my contact information is D. Stevens, Bookkeeping and Tax Service, P.O. Box 69, Syracuse, New York, 13201. You can email me with any questions at techrii@yahoo.com, or you can call me at area code 315-385-1682. You can also find us on Facebook and on YouTube. And thank you. I hope to see you soon. And remember, at Stevens Bookkeeping and Tax Service, we do it faster, we do it better, and we do it cheaper. Bye.